This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Today's podcast is brought to you by Leverage, a new fully featured decentralized futures exchange without compromise. Are you ready to trade the future of crypto today? Well, Leverage is a DEX, so you can trade with your keys and sign orders just with one click, and Leverage is fast. Yes, indeed, Leverage is powered by Gluon, a new layer 2 solution with the scalability and speed of a centralized exchange and the super low fees of a DEX. Yes, Leverage, the new exchange that combines the best features of CeFi and DeFi, so you can trade crypto spot or crypto derivatives with up to 100x leverage while maintaining control of your assets at all times. It's like William Gibson said, the future is already here, but in this case, it's evenly distributed and completely decentralized. Go to leverage.io, and leverage is spelled Leverj.io, and trade the future of crypto today. All right, let's get on with the show. My guest today is Alex Svanevik. Alex is a data scientist and he is the CEO of Nansen, an analytics program for a blockchain and specifically Ethereum, I think. And it combines on-chain data with a massive growing database of millions of wallet labels. Hey, welcome to the show, Alex.
Thanks very much for having me.
I think just to begin with, Alex, why don't you introduce yourself? Tell us a little bit about your background, where you are, where you're from, and what was your journey into blockchain?
Yeah, absolutely. So right now I'm based in Barcelona in Spain. I've been living in Hong Kong for the last 2 years, and I'm originally Norwegian. So I've lived in lots of different countries actually, but my background is in machine learning and AI. So that's, I've worked about 10 years in that space. And I've also done a couple of years in the management consulting world. And I moved into a media group in 2014, where I worked as a data science manager for 4 years. And in 2017 is when I really got into crypto. And so I realized there was kind of an intersection where I could add a lot of value using analytics and data in the space of crypto and blockchain. So I actually worked on quite a lot of different projects. So the reason I moved to Hong Kong, for example, was because I was working with a startup there. And I've also done lots of consulting work for different companies like 0x, which is a decentralized exchange protocol. Worked a bit with Aragon, which is this DAO platform, Total, a DEX aggregator. And then about a year ago is when myself and two other data engineers that I had worked with a lot ended up co-founding Nansen, which you brilliantly described in your intro. So it's effectively an analytics platform which combines on-chain data and off-chain labels, which gives you kind of a contextual layer on top of just the activity that you'd see directly from the blockchain. So we've been working on Nansen now for about a year, and we closed the seed round not too long ago with some great strategic investors. And we've had a lot of fun launching. We launched in April basically to customers, and it's been really fun since then. Lots of growth, lots of engagement and enthusiasm, and now we've managed to grow the team to 7 people at this point. So that's kind of where we are right now.
Fantastic. And look, we'll talk about all this stuff. I do see that you've just raised that seed round last month. Very exciting. So just to rewind it a little bit then, Alex, what was you talked about teaming up with two other colleagues or data scientists to begin building Nansen. And I suppose, just talk us through the origin story or the, what's the kind of the big idea? What's the problem that you're really trying to solve here with Nansen, and who's it for?
Yeah, so especially myself and Evgeny, who's one of the other co-founders, we had worked in the blockchain space with data since 2017, and we had seen kind of a recurring problem that both companies that we worked with, but also individual investors were very interested in. And that was the problem of better understanding who the different participants are on a blockchain network. And so, we already had done a lot of work sort of, making blockchain data itself easily accessible and, readily available for analytics and so on. But this challenge of trying to better understand the participants or the addresses or accounts on a blockchain, in this case, Ethereum, which is what we focus on the most, that seemed to be quite unsolved, or at least there weren't any good analytics products in the market that tackled that problem. So we had, I would say, quite strong validation for this idea even before we started building the product, because we had so many people that we had spoken to who were interested in better understanding wallets. And that could be both for sort of analytical purposes. So you can imagine if you're building like a DeFi protocol or a DEX, a decentralized exchange, or anything like that, you want to understand better, who are the users of those products. That's, on the one hand. And on the other hand, if you're an investor, you probably want to know who are the other investors in a specific crypto asset, like a token, and so on and so forth. So that also maps out quite nicely like who our customer base is. So it's primarily the crypto product teams or protocol teams on the one hand, and then the investors on the other hand. So that's really kind of the big idea, that we wanted to help these two customer segments better understand activity on the blockchain.
Yes. Well, and tell me then, Alex, just give me two quick examples. So for each of those customer bases, let's say. So give us a real world example of how those two different clients would use Nansen to inform their decision making, whether it's in the products that they're building or the investments or trades that they're executing.
Yeah, so I'll give you. One example is with DEXs. You want to understand where the flow of money is coming from. So for example, if you're Uniswap or if you're 0x, Kyber, any of these decentralized exchanges, you probably want to know where the flow of funds is actually coming from. So that's almost analogous to using Google Analytics for a website and understand where you're getting traffic from. And so better understanding what are the sources of liquidity and volume, where's that money actually coming from? That's one problem that you can't solve unless you have good attribution of wallets and labels. So you need to understand not just that this address is 0x123 ABC. You need to know that actually this is an address that belongs to Binance or to Coinbase and so on. So that's one use case where you try to understand the sort of acquisition of liquidity. Another example on that side of things would be in governance, where you might want to better understand who the different governance participants are, not necessarily down to the individual investor, but it might be useful to know, for example, is this large voter someone who is close to the project team itself, for example, in their voting and their governance participation for a specific project, or is it some outsider, perhaps an investor, one of the early investors, and so on. So that's another area where you try to understand a bit better the connection between real world entities and the blockchain. So both of those are examples on the sort of product and protocol side. And then on the investor side, there's a lot of anecdotal examples I have. So, one was when one of our customers discovered that someone who was very close to the inner circle in a particular project I'm not going to name the project, but effectively think of it as like someone who had transacted with a C-level person in an organization. They spotted through our platform that this address was accumulating the token of that project. And so, our customer observing this thought, this is probably because they know something I don't know, right? Which might be bullish in terms of news or in terms of positive developments, because it's very hard to stay up to date with all these different projects, right? So they simply, sort of copy traded that particular address and said, I'm going to increase my position on this token. And in the end, it ended up, being a very, very good trade for them, where they basically Forex their money in a matter of, weeks or months. So, of course, I want to be very clear, there's no guarantee you can have these experiences, right, using Nansen. But that's one example. There's a lot of other anecdotal examples I could give. Just one more briefly was when one of our larger clients effectively spotted that another fund was accumulating an asset that this fund wanted to accumulate as well. And so because of that, they were able to accelerate their own accumulation of that token. And what they told us was that they had effectively execution cost savings of the order of $200,000 to $300,000 just from that information alone. So if you generalize a bit, crypto and blockchain is a space that is very, very I would say information inefficient, which means there's a lot of opportunities, and Nansen really helps customers discover, what are these things that are happening on the blockchain that maybe you should know as an investor in certain crypto assets.
Yep, absolutely fascinating, Alex. And of course, all of this is possible because of the unique properties of blockchain, right? And that, blockchains are this interesting new idea that enables this interesting new idea of, let's call it radical transparency, right? Because you can,
yes.
if you have the skills and the knowledge, you can analyze, on-chain real-time data and real-time movements of all these assets and information. And so I guess I'm interested from a more of a, let's say a higher level or a philosophical level even, Alex. What are your thoughts on what this kind of new form of radical transparency represents, and what do you see its kind of longer term or medium term implications?
So in the short term, I think there are examples of sort of that I just gave where investors can pick up a new source of information that is not readily available in traditional financial markets. So you get an extremely real-time and direct access to what's actually happening in the markets. So that's I think the short-term differentiator. And I think the term radical transparency is a very apt one. It's one I use a lot myself to describe this. And then I think in the longer term, there's obviously, I'd say there's kind of an optimistic take or a positive view on this, and then there's more a pessimistic or a negative view on this. So let me start with the negative, because obviously there are certain entities that trade that prefer to have more privacy. And so then actually the transparency can become a challenge. And so that's one area where I think perhaps there's not been enough, people haven't been conscious enough about how transparent the blockchain really is. And so, in an ironic way, I feel like we have a bit of responsibility to make it clear to people that a lot of the stuff they do everything they do on chain is visible. The key thing is the attribution. It's not always hard to know that you own a specific wallet, but sometimes it can be revealed, through sloppy behavior or not very well, managed privacy and so on. So that's one area which I have some thoughts and opinions on, but it's one sort of area to be thinking of, like what's the challenge when it comes to privacy and so on. I think the more positive view, though, is that transparency also enables an increased degree of trust, in the sense that if you send funds to a centralized entity which does not natively live on the blockchain as such. So if you send funds to a centralized exchange or a centralized lending platform, you don't really know what's happening with your funds, because it's kind of sending your money into a black hole almost. Of course, it's going to live on the blockchain, but it gets split up into other wallets and it's very hard to track. And so the alternative to that is, platforms like Uniswap, 0x on the exchange side, Kyber, etc. And on, say, lending platforms, the counterparty to, say, Nexo and BlockFi would be Compound, for example, or Aave. And these platforms are inherently transparent, like end to end. And so that's an incredible thing when you think about it from the perspective of the consumer or the user of these platforms, right? So I think that's where getting that transparency is actually a massive value add compared to the old world where you had to send funds into some kind of entity and then it was sort of gone. You just had to assume that they were managing it. But so you can think of this as a spectrum, right? Where on the one hand you have the most transparent platforms, and I place Uniswap, Compound, Aave, and so on that side of the spectrum. It's fully transparent and so on. On the other extreme, you have the sort of actually banks and so on in the traditional system where you don't really have any insight into the exact holdings and so on of a bank. And that's actually one reason why we have very strict financial regulation, right? In order to make sure that the banks don't run off with the money or they're under collateralized compared to the capital reserve requirements, etc. But there's an interesting space in the middle with the CeFi platforms. So for example, Nexo, Binance, and so on, where I actually think that a product like Nansen can help those platforms as well become more transparent, because we can help them, we can help surface to users which wallets are owned by these entities. And because of that, the users might have more comfort sending their money there because they know exactly where the money is going to go. And they know that this money isn't being, lent out or lent out without proper collateralization and so on and so forth. So I think that's the kind of interesting and I think more positive take on it, that the transparency actually enables users to get much more insight into these platforms than what you do in the traditional world.
Very interesting again, Alex. And just quickly, as I understand it, your business model it's a subscription-based service, right? So,
yeah.
And at the moment, you focus on the Ethereum blockchain and the Ethereum ecosystem, which of course includes most of DeFi. As I understand it, you will be adding support for Bitcoin as well in the near future. Is that right?
Yes, we are probably going to add support for Bitcoin next year. In fact, we already have, I would say, the plumbing in place. So we have all the Bitcoin, transactions in our data warehouse and all that. It has already been done. The thing we haven't focused that much on, which is really the key differentiator for us as a company, is the wallet labeling and attribution. So that's one area where we're basically thinking, at what state do we have to be at before we can actually roll that out to our customers? So very likely Bitcoin support is coming next year, I would say almost certainly. And then the timing of it depends a bit on how much our customers actually ask for it. There's so much stuff going on now with Ethereum, to be honest, that, just doing that, definitely we've had our hands full just dealing with Ethereum. There's also other blockchains, right? We've spoken to other teams that are interested in having Nansen analytics on their blockchains, but probably Bitcoin's going to be the next one that we add support for.
Great. Well, you mentioned that there is a lot of interesting and exciting activity taking place on Ethereum at the moment. So I think we should just touch on some of this stuff, because I'd be interested in hearing your perspectives, because you're obviously deep in the on-chain weeds, as it were. So, with Ethereum, obviously everyone is looking forward or towards, the slow rollout of Ethereum 2.0. So I'd be interested in just hearing a a little bit about what you see. Firstly, maybe the deposits into the ETH 2.0 smart contract, what's happening there, and then from a more macro view, just what is your take on Ethereum and how it's progressing, and where do you see the potential of Ethereum playing out? I know that's a big question. Maybe we can come back to that, but what's happening on Ethereum?
Yeah, so let me start by the first part of your question about Ethereum 2.0 and the deposits. So this is something that our customers are very interested in. And so we created a dashboard to specifically track this. And I think, it's not too hard to simply track how much Ether is being deposited into that specific contract, right? You can read that off the blockchain right away. But we also added a couple of different perspectives on, for example, the source of funds. So for example, where did the depositors get their funds, which is kind of an interesting thing to look at, because you get an idea of who the entities might be who are first to support Ethereum 2.0 and so on. So but let me start with the high level picture. So it started off relatively fast with deposits into the contract, and then it was quite flat for a while. But many of us expected that towards the sort of deadline, the first deadline, which is November 24th, which is effectively tomorrow as we're recording this, we expected that a lot of people would pile on at the end of that period before that deadline is hit. And so when we get to that deadline, effectively, if there's enough Ether, so if there's 524,000 roughly Ether deposited into that contract, then effectively phase 0 kicks off on December 1st. And so what we've seen, and it's quite exciting because actually today, or the last couple of days, there's been a lot of inflow into the deposit contract. So I think the fear that many people had that perhaps we wouldn't be able to rally up enough ETH holders to get across the finish line, it looks like we might get there. So right now, it looks like about 78%. That's where we are at in terms of the progression, right? How close we are to the goal. So right now, 407,000 Ether has been deposited. Again, we want to hit 524,000. So, and it's grown a lot today. So you can see that a lot of these funds are being deposited, and hopefully we're going to make it across that finish line tomorrow, so that we can basically start phase 0 on December 1st. So that's kind of the status on the deposits themselves. And then just to mention quickly, to see where the funds are actually coming from. So we see funds that originate from Ethereum Foundation, for example, being deposited. That's not so strange, I would say. You also see a lot of holders who have gotten their ETH from Uniswap, which indicates that they are simply Uniswap traders, right? They've either been trading Ether for tokens on Uniswap, or they've been providing liquidity, and now they're withdrawing some of that Ether and then depositing it into this ETH2 deposit contract. And then you see a lot of the other exchanges, like Kraken is the biggest centralized exchange that we see money flowing out of and into the ETH deposit contract. It doesn't go directly from Kraken, of course. It goes via the user's own addresses. So it's quite exciting to be following this stuff. And, we've got this dashboard that I personally have been refreshing a couple of times today just to see how the status is. And there's actually more than 1,200 unique addresses that have deposited, the minimum of 32 Ether into this contract. And that has resulted in 12,735 validators for Ethereum 2.0. So that's a lot of the stats, at least, on how it's going. It looks quite promising. I'd say if I were to bet, I'd say that we're actually going to make it in time so that we can start phase 0 on December 1st. So that's all well and good. So your second question about Ethereum after that. So I think there's a lot of enthusiasm about Ethereum 2.0, and I just hope that a lot of people understand that it's not going to happen overnight. It's going to be a pretty long process of transitioning from Ethereum 1.0 to 2.0. So, there's a lot of excitement about this phase 0 because it's a big milestone. But at the same time, I just hope it's not going to be a big anti-climax when phase 0 actually starts, because, there's not that much interesting that's going to be happening for a while with Ethereum 2.0 as such. But the outlook, I think, is very exciting. And many of the challenges that we had with Ethereum 1.0 are going to be addressed with 2.0. So in particular, there's been an explosion in DeFi, right? In the last 2 years, but especially this year, it's really exploded. And you've really seen that Ethereum 1.0 doesn't really scale that well. And we've had gas congestion, and it's been quite rough for a lot of people that just want to, use Ethereum without having to send $100,000 worth of Ether into some yield farming contract, right? It's been several dollars worth of transaction fees per transaction in many cases, which is not a great experience. And hopefully those things should be improved in Ethereum 2.0.
Well, and speaking of DeFi then, Alex, what do you're right, obviously, in that DeFi has kind of, come from almost, nowhere 2 years ago, and then a slow trickle, and then a massive boom, particularly in the middle of this year, and perhaps just a minor cooling off period recently. But on the sort of, what are your long-term expectations of the kind of, the DeFi ecosystem and DeFi products and the new capabilities that those products enable? And I guess the second part of it, any concerns, in particular, we see these smart contract exploits that are taking place almost on a weekly basis, and when those happen, of course, the blockchain detectives, people like yourself, I suppose, are tracing where those funds go and how they get filtered out, or occasionally even returned. But yeah, so thoughts on DeFi?
Yeah, many people compared the DeFi boom to the ICO boom of 2017. And I think there are some interesting parallels, but I think the big difference is that you can see a much more short-term sustainable future for DeFi as opposed to ICO. So with ICOs, you could also make the argument that perhaps we'll see an ICO 2.0 in the future, which is more sustainable, and it has, it addresses a lot of the issues you had in 2017. But with DeFi, it feels like that sustainable version of it is much closer. So when it comes to concerns, I think, there's obviously been exploits. I'm not too concerned about that. That I feel like that's kind of just the evolutionary process of both protocols and investors, quite frankly. People take big risks when they pile into these different smart contracts, and hopefully in most cases they're aware that they could lose all their money through exploits or bugs in the smart contracts. So I'm not actually too worried about the exploits. I think long term is actually a good thing, because it hardens the developers, it hardens the standards we use, the contracts, which will inevitably get forked the longer they've survived, and the more dollars that they've secured, the safer they will be through kind of a Lindy effect. So I think that's not actually a bad thing. I think it's okay. And if you are actively participating in, say, yield farming schemes and so on, I think you just have to accept that you are a guinea pig and you could lose all your funds overnight. So you're actually in a way doing a service to the ecosystem, because your funds serves as a bounty for a malicious hacker who wants to get those funds. So in that sense, like, it looks like just speculation and it serves no purpose, but in a way you are funding hackers who could get into those contracts if they have bugs. So from that sense, I think that's actually a good thing. And then, the outlook of DeFi, clearly, for me, the most important thing is the user experience. And now I'm talking about how you get DeFi, to the billions of people, not just a couple of 100,000, enthusiasts around the world. And really, right now it's very, very confusing, very complicated to use DeFi, and this may be a bit controversial, especially to purist decentralization fans around the world, but I do think that the future of DeFi is something that probably resembles a mix of CeFi or centralized finance, but crypto powered centralized finance and DeFi. So I do actually think that there's going to be a lot of both startups and existing entities in the crypto space that start integrating more directly with DeFi protocols in the future. And normal users, people who aren't necessarily developers or crypto enthusiasts, are probably going to be interfacing with DeFi protocols through entities like Coinbase. I think that's more likely. And it's quite interesting because it seems like this trend of, CeFi leveraging DeFi and actually building sort of the user interface and user experience on top of these protocols, that trend has actually gotten, it has started in Asia, and it's been a much bigger focus area for many of the Asian exchanges, for example, than it has for many of the Western exchanges. So this is quite, I'd say, interesting, because we tend to think that maybe the prejudice is that a lot of the innovation happens in the West, and then certain countries in the East will primarily copy. But I think this is one area where it's clear that a lot of the innovation is happening in the East. So that's one, I think, really big trend that we're going to see over the next few years, where the lines will get a bit more blurred between what is fintech, what is centralized finance, and what is DeFi. So I really hope that many of the popular fintech companies, for example, Revolut in Europe, will start looking more closely at DeFi eventually, because it's clear that, even if you disregard the ideological aspects of DeFi, of decentralization, the fact that you can't censor applications and so on, they have some very concrete value adds, like 10x value adds, right? Both when you look at what kind of interest rates you can get from some of these, relatively safe protocols like Compound, like Aave, and so on, versus how much interest rates or how high interest rates you can get on your bank savings, for example. That's, in many cases, we're talking about 10x or more, right? That's one huge value add, where it seems clear that if Revolut figures out how to sort of deliver this to their customers, that's just an amazing feature to have in the platform. They might not even need to know that it's crypto that they're interacting with at the end of the day. So, savings is one thing, transaction costs in between the fintech entities, settlement costs are pretty high in traditional finance, because it has to go through so many middlemen, right? With crypto, you could imagine that some fintech company actually does a large batch transfer to another fintech entity without having to go through any of these middlemen. And so, of course, those fintech entities are themselves middlemen, but I just think I see a world where these fintech companies play a very important role in being interfaces for users. And so, this is where you could say it's a bit controversial, because many people feel like the key thing with blockchain is that you have direct peer-to-peer interaction capabilities, right? You can send money to whoever directly without any like fintech company in between. But I think in order to get to the billion or billions in plural of people, you probably need to get the fintech companies on board, and also clearly you need to also get the CeFi companies that are already in crypto on board, like Binance, Coinbase, etc.
Yes. And just to maybe begin to finish off on the crypto stuff, Alex, you tweeted something interesting recently or I'm not sure if it's interesting or controversial, but you said that normal people buy Bitcoin as a bet on innovation, whereas crypto people buy Bitcoin as a bet on non-innovation. And then you also said something like, Bitcoin is more attractive to incumbents because they can see that there's still room for them as intermediaries, whereas Ethereum is perhaps less attractive or perhaps scarier because intermediaries can be removed from the equation altogether. Although what you were talking about before, I think maybe is probably the more likely path, where there's sort of these interactions with companies like Coinbase on the back end. But yeah, no, I'd just love to get your sort of your wider context on what you're talking about there.
Yeah, so if I start with the second tweet about the intermediaries, that's exactly what I was talking about earlier. So, I tend to think in terms of Ethereum, right? That's why I'm talking about DeFi. But if you talk about Bitcoin, I don't really see something that is similar to DeFi, if not Ethereum itself. So the only way you can really have interesting financial applications with Bitcoin is necessarily through centralized entities. I mean, there are some exceptions with Lightning Network and so on, which has been, I think we should admit, quite disappointing with regards to adoption, but maybe it's still early, who knows. But it seems to me that literally the only way you can get Bitcoin to the millions is actually through these big centralized entities like Coinbase, for example, right? There isn't really, it's simply too complicated in many cases to get Bitcoin without using a centralized exchange. And of course, that's similar with Ethereum. But once you're in the Ethereum ecosystem, you can do a lot of things without needing to, say, deposit your funds into some centralized entity. Instead, you would deposit funds into smart contracts, which are fully, auditable, transparent, and so on. So I think there is a big difference here. And when I was talking earlier about how probably, you won't have full decentralization, you'll have some kind of combination of fintech and blockchain that actually works in practice. With Bitcoin, that's a necessity. I mean, there's really no way around it, in my opinion. You need those centralized startups, companies and so on that make sort of, they integrate with Bitcoin in the sense that they have rails, they use the blockchain to send funds here and there, and they accept deposits and so on. But the core functionality of whatever they're building can't live on the Bitcoin blockchain. So that's, I think, a key difference between Bitcoin and Ethereum. But even in the case of Ethereum, it's not clear that we will have this world where everything works, fully decentralized and everyone's interacting with each other through pools instead of just, via companies. And when I say pools, I mean, smart contracts and so on. So that's the distinction, I would say, between Bitcoin and Ethereum as such. And the recent news with PayPal, for example, supporting Bitcoin, I mean, that's one example, right? Like PayPal see themselves in the ecosystem of Bitcoin because they see that there's no way you're going to go down to, the shop and pay for something directly from your Bitcoin wallet. It's not very likely. I mean, we've had that exist for a while and it just hasn't really taken off, and probably people don't want to use Bitcoin that way. But, if you could very, very cheaply and quickly send it through PayPal accounts, perhaps people would prefer that, right? So that's where I think they see that there's room for them, and that's also why they would be more eager to get behind Bitcoin alone than get behind some of these DeFi protocols, which are inherently more disruptive. So that's the thinking on that second tweet. On the first tweet, so maybe it's related, and it's not at all a dunk on Bitcoin. I think some people read that tweet, and now just to refresh, it was about how people outside of crypto bet on Bitcoin as they bet on innovation, but crypto people they use Bitcoin as a bet on non-innovation. And so the thinking is really that you actually need a complement to something like Ethereum, because Ethereum is sort of the fox and Bitcoin is the hedgehog. So Ethereum is very fast moving, experimental. there's a lot of stuff that goes wrong in these smart contracts, and it's very risky in many ways. But Bitcoin is very slow moving, right? It has a known supply schedule, for example, right? We know exactly how many Bitcoins are going to exist in whatever year you want. You can just project it. At least that's the plan, unless there's some kind of fork that changes that. But you can assume that's going to stay as planned. So when crypto people buy Bitcoin, I think it's because they actually use it as kind of a hedge, where they want to have something that is predictable, and they know exactly what's going to happen with it. And necessarily that entails that there's not going to be a lot of innovation on top of it. So you can't really have your cake and eat it too. If people describe Bitcoin as something that is innovative in the future, I don't really see how that's true. It has been extremely innovative, the creation of it in itself. And of course, there are still things that need to be improved with the protocol itself and the blockchain itself, and the ecosystem around it. But I don't think the selling point of Bitcoin is that it's innovative to crypto people. So that's what I mean there. And when people rather want something which represents a bet on innovation within crypto, it tends to be other blockchains, right, that are more fast moving, that basically don't have this very rigid future which Bitcoin has. So just want to be clear that it's not a negative thing about Bitcoin. It's just a different thing. And one analogy I like to use for Ethereum versus Bitcoin, because I'm a fan of both, I just think they're very different things, is like, being a Bitcoin maximalist is kind of like saying that the bicycle is the ultimate vehicle for human beings, and you'll never find anything else which could be useful in other contexts, right? But then vice versa, like if you're a car maximalist, I mean, you've obviously ignored the fact that the bicycle has been extremely useful and is extremely resilient and still being used by millions of people all over the world. So the bicycle is not going anywhere just because people now get cars, right? They just serve different purposes. Yes. And and that's kind of the thinking on Bitcoin versus Ethereum in that sense.
Well, I think that makes a lot of sense, Alex. And look, just before we go to a break, and then we'll come back and we'll finish off with the crypto conversation hot take round. But I just wonder, Alex, one of the big narratives at the moment with Bitcoin, particularly with the PayPal news. So you probably will have seen the analysis of the supposed supply crisis, right, with Bitcoin, because PayPal and Square alone appear to be buying up the daily supply of newly mined Bitcoins. So I just wonder if you've spent any time looking into this yourself from a blockchain analysis point of view, and is there anything you see in terms of whether miners aren't selling, or all these corporate entities are actually buying all the available Bitcoins? What's going on?
So I've spent a lot of time looking at this for, crypto assets on Ethereum, because that's kind of where we operate mostly. I probably should have looked at it for Bitcoin, to be honest. And I've sort of just assumed that this is happening, to be honest, based on the narratives I've been following. And, with MicroStrategy as well, by buying up lots of Bitcoin. And we seem to have gone from like retail FOMO in 2017 to like corporate FOMO in 2020. Unfortunately, I can't give any hard data on Bitcoin specifically, but it doesn't surprise me at all to hear that that's happening.
Fantastic. That can only be bullish for Bitcoin in the short term, probably medium term, and probably long term as well. But we'll just have to see. Hey, let's go to a very quick break, and then we'll come back and we'll finish off with the crypto conversation hot take round.
Are you ready to trade the future of crypto today? Introducing Leverage, a full-featured decentralized futures exchange without compromise. Leverage is a DEX. Trade with your keys and sign with one click. Leverage is fast. It's powered by Gluon, a layer 2 solution with the scalability and speed of a centralized exchange and the low fees of a DEX. Say goodbye to exchange hacks, front-running, Ethereum network congestion, and high gas fees. Leverage, the new exchange that combines the best features of CeFi and DeFi so you can trade crypto spot and derivatives with up to 100x leverage while maintaining control of your assets at all times. Like William Gibson said, the future is already here, but in this case, it's evenly distributed and completely decentralized. Go to www.leverj.io and trade the future of crypto today. For crypto indices and benchmarking, Brave New Coin's powerful indexing engine can calculate high-frequency intraday and end-of-day indices for a wide range of index products. Brave New Coin's custom indices team delivers experienced consultancy, premium data, and trusted calculation. Contact BNC today to find out more.
All right, we're back and I'm with Alex Svanevik. Alex is a data guy and he is the CEO of the Nansen analytics platform. Alex, I like to finish each podcast with a quick round of rapid fire crypto conversation hot takes. Are you up for it?
I'm up for it. Let's do it.
All right, just want your hot takes, your hot fire, take your best shot. Here we go. I think I know the answer to this first one, Alex, but where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
I'm a multi-coinist, definitely.
Of course. All right, well, Alex, what would you say is your firmest conviction crypto opinion?
My firmest opinion is that it really will change the world for the better.
Very nice. Okay, what about UBI as a potential fix for AI-induced automation, or even more controversially, as a potential solve for growing global inequality? UBI, is this a good idea or not?
I've warmed up to the idea a lot over the last few years, but I would really like to see more data on it, so more experiments in local communities before we roll it out nationally.
Makes sense. Okay, well, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. What does, whatever you like, blockchain, Ethereum or Bitcoin, what does it look like in 10 years' time?
As I said, I really think that pretty much all of the financial world will operate on some form of blockchain infrastructure in 10 years. So probably banks won't even be around, or there'll be a pretty small niche, because a lot of these DeFi protocols and crypto native products will have eaten up their market share. So I think we're gonna have a world which looks very different, where intermediaries are, they have a much smaller role than they do today. And I also, this is more a hope than a prediction, but I really hope that some of the incentive mechanisms that people are working on in the crypto space will also make more people owners of that infrastructure rather than just being consumers of it.
Very nice. Okay, well, William Gibson, sci-fi author, Alex, he said that the future is already here. It's just not evenly distributed. Can you think of an example of the future being here right now, but most people just aren't really aware of it?
I mean, crypto itself is the best example in the world, in my opinion. So, when I use, let's say you use MakerDAO to issue up a loan against your Ether, and then the next day you have to go to the bank to try to get them to give you a mortgage, and it's a 4-month process at best. It's just an example of how the future is really here when it comes to many of these financial applications. But you speak to any person on the street or anyone in your family about them, and it sounds like science fiction to them, and they probably don't believe it. I think it's a scam. So I think that I really like the contrast and sort of analogy between the email and the post office, and I really feel that MetaMask and crypto, Compound, Aave, MakerDAO, all that stuff, compared to the bank office, that's the exact same parallel, and very few people are actually using crypto today. So that's crypto itself is the best example, I think, and DeFi.
Very nice, Alex. Okay, time to zoom out and get a little bit weird. What do you see as the long-term future for the human race? Do you see dystopia or utopia?
Well, those are the two extremes, right? I mean, my background is in AI, so without a doubt, it's going to be a future which is heavily influenced by AI. And I also subscribe to the view that I think we'll end up in some kind of transhuman future. So most likely humans and computers will merge somehow. And, you know, currently it's just an interface problem, really. So we are already merged with our smartphones, I would say, behaviorally and information-wise, the information processing. But we have a really, bad, low bandwidth information channel between the screen and our eyes, right? If you have a more direct channel, I think that's when it gets really interesting. So I think you have to be optimistic, right? Not sure I would call it utopia, but I don't see a dystopian future, at least, and I believe that the most optimistic future is one where effectively machines and humans are on the same team and perhaps will even have merged to some extent.
Yeah, I think you're exactly right, and I agree wholeheartedly. All right, well, let's finish this off, Alex, on a slightly similar note, I guess. The final question is, of course, what is your favorite science fiction book, film, show, or universe?
Yeah, so my favorite science fiction movie is Blade Runner, and also the book Do Androids Dream of Electric Sheep, which it's based on.
Yes.
It's just
Philip K. Dick.
It's a great Philip K. Dick, exactly. Yeah, it's just an amazing movie. It's the atmosphere, the eerie feeling that at least one of the robots in that movie doesn't even know that they are a robot themselves is a very fascinating idea to me.
Yes, indeed. All right. Well, very nicely said, Alex. Thank you so much for talking to me today. This has been a really interesting conversation. Look, take us out. Please tell the people where they can go to find you on your various platforms, and give a little bit of a final shout out for Nansen and why people should come and check it out.
Yeah, so definitely go to nansen.ai to check out the product itself. We have a 7-day trial that you can use to see if you like the product. We also have a Discord channel that you get invited into when you do the trial, and there's even a little private channel there which you can join as a trial user. Otherwise, you can find me on Twitter at @Svanevik. You can also find Nansen itself on Nansen_AI on Twitter.
Excellent. Hey, all the best, Alex. Thank you very much. Bye for now.
Thank you so much. Bye-bye.
Okay, well, there you go. Thank you to Leverage for sponsoring the podcast. Leverage is a full-featured decentralized futures exchange without compromise. So if you're ready to trade the future of crypto today, Leverage is for you. It's a DEX and it's fast because it's powered by Gluon, the new Layer 2 solution that supports the scalability and speed of a centralized exchange with the low fees of a DEX. Yes, Leverage. It combines the best features of CeFi and DeFi, so you can trade crypto spot or crypto derivatives with up to 100x leverage, and you maintain control of your assets at all times. So go to Leverage, which is leverj.io, and trade the future of crypto today. All right. That's us. We are out of here. Don't forget, if you did enjoy the show, please do feel free to give us a 5-star rating and even a nice review in Apple iTunes or the Apple Podcasts app. Would certainly appreciate that. Bye for now. See you real soon. This was the Crypto Conversation for Brave and New Coin.